Good afternoon, everybody. Good afternoon, and welcome to Paul's Monday Market Update, number 184 for Monday, 19th of May, 2025. I hope you're well. Hope you've had a good weekend. Hope you've enjoyed these to the trading week. As always, before we dig in, for those of you joining us in the for the live session or joining us on the live stream, YouTube live stream, it'd be just great to know that you can confirm that you can hear my voice and that you can see the slides, so that we know the technology is working in our favours. For those of you joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can share with you in the next 25 to 30 minutes, looking at strength and weakness in the FX markets, looking at some charts of interest, and then having a look at the live markets. It's not a trade signal service. It's not a recommendation service. It's just me sharing what I'm looking at, which might be actually of help or use to yourselves in your own trading endeavours. As always, you're very welcome here. Just remember that you're always responsible for your own trading decisions. And if you want a bit of help and support with your trading, the VTP Tag Trader Accountability Group is up and running, doing weekly sessions, on basically trying to clear out bad habits, develop discipline, and then invariably sort of start to build your own trading community. If you want information, you can ping me or just use that QR code. As always, I will be delivering a webinar later on this afternoon, with some educational element for active trades, the Monday Market Matters webinar, 2:00 London time, trading the FTR, the failed to return pattern. You can either go on the website to register or use that QR code. And I'm also delivering a weekly market update, 7:00 on Wednesday evenings for our Admiral markets. Once again, you can sign up on their website or use the QR code if you wish to join us. All right, let's cut to the chase and dig into the main thrust of our session today. So, what is this? This are elements of my STAM. The STAM is the it's part of the weekend work that I do to look at, develop, and understand where's the strength, trend, and momentum, primarily within FX markets, but also in indices and commodities markets. So it helps me prioritize my time, energy, and resources for the week ahead. So what is this telling us? How is it helping us? Well, here we are. We're into week 21 of the year. Where's the strength? Where's the weakness? Well, from doing this at the weekend, what we have is we still have Swiss Franc, as top of the pile, with Sterling, in second. And bottom of the piles has had Canadian dollar dropping, and also the US dollar, sat there firmly on the bottom of the pile. So, what can we expect? What can we change? Well, of course, last week was a bit of an interesting week in that, we gone giddiness from the US-China trade truce, shall we say, from last week. That gave everyone a little bit of risk on giddiness. But then on Friday night, we then had Moody's, to provide a downgrade, for the basically the US on their credit ratings from, I think it was from AAA to AA1, and of course that basically sort of how can we put it? So that sort of took the wind out of the sails of that risk on giddiness in terms for the dollar, which we'll look at in a moment, and also for equity indexes, which we'll look at in a moment. And then, of course, what we have had over the weekend as well is that Prime Minister Starmer sort of getting on his knees and submitting to his European overlords and masters. I might be being a little bit sarcastic there, but you get the message. And invariably that has had an impact on both euro and sterling, which you can actually see today, in terms of how we've jumped. And we'll look at both euro and sterling later, to see how that has particularly affected us. So, what we have here is, as I said, sterling second, euro in fourth. I probably see this week is euro will rally, and it would not surprise me if sterling continues to the top of the pile. Remember, for those of us here in the UK, of course, we have UK data. We've got UK CPI data on Wednesday morning. At the moment, that's forecast to come in hot, hotter than certainly than last month. And if everything does, well, then that means that will likely be kind of bullish for sterling. And then we also have PMIs for not only the UK, but also for France and Germany and the US on Thursday. And then we've got UK retail sales Friday morning as well. So people want to see, the kind of the strength of the consumer within the UK. So that's where we're looking in terms of strength and weakness. And as I said, basically everything has strengthened against the US, okay, since the start of the sessions last night. And that no surprise, really, as I said, after that kind of Moody's downgrade. And we'll be looking to see how those American indexes, formally open, all right, in what's in about a couple of hours' time, etc. And see what, if any, impact that really has on that, as I say, that kind of risk-on giddiness that we saw for a good part of last week off the back of those, not only the sort of the trade talks, but also, Trump's little jolly around the Middle East, and more of that in a moment when we look at some of the charts of interest. What is of interest to me is when I look at the individual currencies there, across a lot of the those Aussie and Kiwi and Canadian dollars, those com dollars, a lot of them are shifting into buying environments, STAM 1 and STAM 2 buying environments, which sort of starts to get me to sort of sit up and take notice. When we look at the this is a very changed picture from what 6 weeks ago, where it's pretty much all red. Look at that now, okay? All of those kind of major indexes for me. All right, so we've got the US, okay, we've got European, Asian. They are all in either strategic or tactical buying, selling environments, okay? A real V-shaped recovery there, really very quickly, quite fascinating. And we talked about this, I don't know, was it 3-4 weeks ago, about how the kind of tariff fatigue had flipped to kind of a bit of risk on giddiness, and that has just followed through, and we'll see if we get more of that this week as well. With that, of course, what we've seen is, as we look at, gold has come out of a buying environment, so has silver. Bitcoin does remain in a strategic buying environment. Maybe we'll have a quick look at that chart there, but no surprise, what we're seeing is gold and silver kind of coming off as we've got that kind of risk on, sort of, that kind of mostly risk on mentality coming through. As I said, we'll have to wait and see to the start of this week whether that Moody's downgrade has any major impact on US equities later on this afternoon. Okay. Okay, so let's have a look at just a couple of charts of interest. So I just put up, normally like 3-4 charts of interest that are either something that's, going through its earnings or as price actions of interest that you might want to add it to your watch list. Okay, so this is Boeing company on the weekly chart. Those of you who've joined me for the last 5 years or so that I've been doing this will know that, I'm not the big. Okay, I've got my own, and I take an interest in aerospace and defence. It's one of my main sectors. I've not exactly been the biggest fan of Boeing, and I've been very happy to put their share prices reflected their, let's say, their business practices. But equally, what you also have to do is, as a trader, regardless of what your own thoughts and opinions and biases might be, you have to trade what you see. And we talked about this a little bit about how invariably, we had seen price sort of kind of coming $50 area. I think if you remember, we bounced off it a while back because actually Trump was talking about the I think it's called the NGAD, the next generation air dominance aircraft, the F-47 for the US, and that had a little bit of a kind of almost like a kind of dead cat bounce for it. But what we can see is, having kind of tripped our way down to $130 here, we're now back up trading above $200. I think a lot of that is to do with Trump's little trade. His little trade trip, okay, to the Middle East, all right. So he got some very, very big deals for Boeing and for aerospace, General Electric, all right, okay, so General Electric engines on that, and as you can see, that basically has, Trump has pretty much bailed Boeing out. Furthermore, it's become. I think the Boeing is about to get a kind of a deal with the Department of Justice, whereby they all of the issues they had a few years ago with those 737 MAX aircraft are going to be sort of for want of a better word, sort of swept under a rug and sort of forgotten about, which means the victims will the victims will lose out, and Boeing will carry on operating as they do, all of which has given it that share price bump there from 130 up to 210. Yeah, so my view would be it has to stay above $200 to give me any conviction that that it's cleaning house internally, and that externally it's changing in terms of winning deals and manoeuvring its way forward. But that's why I've been watching this, because it has been quite some run. I talked earlier a little bit about that kind of V-shaped, kind of recovery that we've seen, and a good example of this is Bank of New York Mellon. Okay, this once again is the weekly chart, and what you can see here is pretty much like most of American finance companies. Okay, most XLF, etc. Was in a fabulous trend there. Okay, until it wasn't, until basically, of course, we had the kind of that sort of drop there based off all the tariff talk. But just look at how quickly, all right, look how quickly these guys have recovered, okay, and they've recovered quicker and faster and sharper than many of the other finance companies. I cannot give you a particular reason why. I'm sure smarter people here with a fundamental insight could probably give you a better view on why. I'm just looking at the chart and trade what I see, and what we can see is here, as always, we came back down, big round number, couldn't break it. We basically couldn't break the 50 period moving average on the weekly chart, and then then we closed above the 20, and as you can see, bang, there kind of gaps up there, up back trading against those highs there at $90 up there. Okay, pre-market 89, but I'll be watching to see how does it react to that this week. All right, does it continue to surge over? So is it and form a double top? So it's at a level where I'm interested, and that's what I'm watching. And as I said, it has done that kind of V-shaped movement much stronger and faster than many other of those kind of banks and finance companies. So as I said, I'll watch to see how it plays out around $90. And final one is Zoom ZM. All right. Once again, this is the weekly chart. Zoom, we have there's quite a busy earnings week in terms of quantity, but not. Okay, most of the big names have gone already. Okay, so we've got a lot on, but we have Zoom on. I think it's after the close on Wednesday. Yeah, after the close on Wednesday. Listen, I'm delivering this on Zoom. Most of us, in since lockdown, have had, if it's not Teams, you're using Zoom. Okay, and regardless of, let's say some elements of concerns over security, etc. Most people use Zoom. I use Zoom. All right, it's perfectly fine. As a means of communications and stuff, and what have you, delivering sessions like these, you can't fault it in that sense. But really, as a trader, you got to look at what the score is now. I traded Zoom back at the start of the lockdown. Literally it was the COVID trade. You basically bought Zoom and shorted IWG, who were Regis, who I had my office in and wanted to charge me full whack throughout the lockdown without allowing me access to my own office. So invariably, I shorted them and basically bought Zoom, as most people did, and they had a terrific run. But once we locked out, you can see for yourself, Zoom basically bang fell away. And this weekly chart for the last 3 years or so, what we have seen is price hamming around there between $90 and for the most part $60. Let's get the old drawing tool up here. You can see for yourself there. As I said, excuse my artistry. I'm a better trader than I'm an artist, but you get the picture, don't you? We have been in that kind of $60 to $90 range for the vast majority of the last couple of years, and I wonder whether we'll get the data this week that pushes up to 90. And once again, if we push up to 90, what do we do there? All right, what do we do there? Here it was support, okay, then we sliced it, then it become resistance. Is it going to be resistance again? And if it's not, well then, I'm looking there at the 200 period moving average and the big round number of $100, okay, as a next target, okay. So I think later on this week that might be interesting to take a look at to see how that particularly plays out with its numbers and how it operates in that, as I said, in that kind of $90-$100 range. That's what I'll be focusing on. All right, so there we go. Some charts of interest, but I think more of the interest is on the actual live markets themselves, and there's lots going on there. So if you just bear with me for a minute, we'll switch across to the live markets and we'll look. So just bear with me for one moment, ladies and gentlemen, and we'll switch across. Okay, so I'm hoping that you can still see me, hoping that you can still hear me. Okay, this is a platform. This is the form. Okay, in terms of I have a profile with mostly my indices on. So I've got this is Dow on the weekly, Nasdaq weekly, S&P 500 weekly, Russell weekly, FTSE weekly, Nikkei, DAX, and then oil. Um, oil's holding above 60. All right. I think there was kind of a little bit of an excitement there in terms of last week when, we looked at, there being a deal done with that having a, positive impact on global markets, meaning having a global positive impact on oil. Then, of course, if there is talk of, if the kind of rumors are that there might be a US-Iran deal, and that would have an impact, I would suggest, on kind of lowering oil, okay, in terms of, if Iran is allowed to re-enter the sort of, let's say, global markets, that could have an impact on lowering its oil. So it's above 60. I'll wait and see what the kind of the geopolitical elements are there in terms of making my next call. What we're looking at here, look, Dow, all right, we spoke about this last week. Bit of risk on giddiness. We got back up above the 50 and above the 20. And what we saw, Nasdaq back above the 50, back above the 20 here. Okay, S&P 500. Russell had a good week, but it is still beneath its weekly 50. It's bouncing off the 20. So we had that kind of risk on giddiness. That's what I was talking about. Okay, last week after the Trace deal. Now we're seeing, well, actually, is that Moody's kind of downgrade? Is it really going to have a genuine impact? So, these are the electronic contracts. Okay, for today, I would be, mostly it was kind of a negative impact on the kind of, let's say, those of you trading like electronic contracts. We will see what the main market, main exchange makes of it. Okay, when that clicks on there. Interestingly, in terms of who else is an interesting point, the Nikkei, which we don't really talk about that much, but we can see here, that V-shaped recovery. But last week, we printed up here. This is, it's a bounce off the 50-period moving average there. Okay, nice rejection candle, and that kind of at the start of this week, that has kind of followed its way through there. All right, that's that's what kind of always like to see there. Okay, does it come down, come up, and then continue its leg down? That's what I'll be looking. Listen, DAX continues. All right. Last week, look at that. We really did have that V recovery, and we closed at highs. And I think that they'll be having the best the best glasses of Chateau Lafite after today's announcements and stuff. So I expect that to sort of kind of fall its way through into Euro and European indexes, which we'll look at in a moment. But yeah, you can see that has just still remained that kind of close to home, FTSE. All right. It has done a V-shaped recovery, but nowhere near as strong as DAX. But that's no surprise. Bit of a mixed week, all right. Bit of a mixed week and stuff in terms of mixed couple of weeks between data coming out of the UK, between trade deals being done, between other events going on, shall we say. If I go down to the daily chart, we've spent this month sat above the daily 50. That's why we look at it. Okay, that's the way I'll be looking at it. We've sat this month, so that is bullish. But if you look at that price action, does that excite you, ladies and gentlemen? Does that sort of get you thinking, oh yes, I want a piece of that and stuff? I remain to be convinced by that on the FTSE myself. I know others will love it, and that's fair enough. That's what makes a market. Let's have a little look at gold. Gold has last week, we had that double top, which we talked about. Double top rolled off, closed lower as well. Yep, there was a bit of support there. But if I go down to that daily chart, that support is gold sat on the daily 50. See that? Very nice. It kind of sat on the nice 50. They kind of for me, the bearish scenario would be we come up to the 20 and then we reverse down to 3,000. Right, that's what I'd be looking at. I'd be looking to see how does it react at the 20 period moving average. That would be my scenario. Clearly, if it gets back up above the 20 and starts holding, that for me would be bullish. And then then I'm looking at, well, you've got to get yourself back up to around that 34.15 level. That would be my bullish scenario. I would have more of an indication on the bearish. However, as I said, a lot of this is also impacted by not only the risk on, risk off story, but also what's going on with the dollar, which we're about to look at in a moment. Okay, and that dollar picture has changed over the last day or so. Silver, I don't, once again, that's the weekly chart. The way I'd be looking at is that all of the weekly highs have been lower. That's the way I'll be looking at that. Okay, so I'll be looking at here. Are we seeing a bang? Let's use this. Not the best trend line, but an idea of, I'd be needing to see us breaking above that and closing above that, and then going for last year's highs again to convince me. I think that is just that's it's not terribly exciting to me at this particular moment. All right, so fine. So there's indices, commodities. Let's have a look at dollar. We'll have a look at dollar. We'll have a look at euro, and we'll have a look at. We always finish off on sterling. So I've got lots and lots of charts running here today and stuff. Far too many. That's the problem. But anyway, as this decides to come up, I think I've left my platform. As that comes up. So kind of my this is my STAM dashboard. Okay, so those of you on VTP stage 2 get access to that. But what I can see is sterling has pushed its way, dollar's pushing itself lower. All right, that's confirming there. Okay, the sterling is kind of basically pumping its way up there. Swiss franc is still strong, but then also you've had euro a bit strength on that 4-hour chart. So that gives me up to date indications based upon the STAM. But yeah, here we go. This is my dollar profile. I think I've got these on the 4-hour charts to give you an indication. Okay, so Aussie dollar, look at that, dollar weakness to start the week. Euro dollar, bang, dollar weakness to start the week. Pound dollar, which we look at more, but you get the impression. Dollar against Swiss franc, bang, all right, dollar weakness. Kiwi against dollar, dollar weakness. Dollar CAD, dollar weakness, bang, dollar yen. All right, well, it's continued as a bit of dollar weakness there. So, that is the kind of the immediate impact of the, I'd say, that Moody's downgrade. If I look at the DAX, the Dixie itself, the weekly chart, I talked about how, I was looking to see if it, was forming a bit of a bottom and just pushing its way back up above 100, pushing it back up. But as you can see last week, we had been pushing up and then we came all the way back down. And if we go down to the daily chart, if we look at it, I look at this, I think I talked about this last week. We'd had the inverse head and shoulders. We'd used 100 as the neckline. What I looked at a scenario was we basically come up to the 50, down to the 100, and then up to the 200. That was like a possible scenario, bullish scenario for me. And of course, if that is bullish dollar, that means it's bearish gold, within limits. But what we can see here, what I'm intrigued is we're back around to 100. And the thing is that has been driven down by the Moody's downgrade. That's not what I was expecting on Friday. I don't think anybody was. Well, I don't think anybody was expecting it. But if there's one thing I've learned in trading markets for a long time, is somebody somewhere always knows something, and it is human nature to basically to take advantage of that informational edge if you have it. So here we are. Here, look at that. The 20 period moving averages is stage 1 PO20. All right, the 20 acted as resistance. Is it now going to act as support? And are we just going to get a squeeze here at 100 between the 20 and the 50 in price before it makes its next move? Because if it does, well, then what is the sort of thing that would conjure up that move? Okay. News-wise, there's not massive amounts of news, formal news out of the US. There's unemployment claims and PMI on Thursday. I don't think personally that's enough unless those numbers were shockers to shift the needle. So then it's going to be look out, is there going to be something Trump's going to do or something else is going to happen that will have that impact? But as I said, I see that as coiling up. That's the way I'd be looking at that at the moment, and it's waiting. Basically, give it a shove. All right, so that was dollar. What have we got here? Now we're on to the euro. I think it's probably fair to say, even if I am biased, is that the deal here, although Starmer is going to sell it to us as a great piece of negotiation on his part, what lots of people will have forgotten is that during the initial negotiations in 2016, 2017, 2018, Starmer used to go to Brussels to help the EU negotiate against the UK position. In the old days, that would have had your head on a spike outside tower, the tower in London, etc. And there's a part of me thinks that they were the good old days. Anyway, what I mean is that I think this deal is gonna benefit Europe more so than us, and no surprise that actually, if you look at Euro Dollar daily, it's been a strong day for the Euro Yen, strong day for the Euro. Okay, Euro Sterling will come to. Euro Swiss Franc, strong day for the Euro. Okay, Euro Kiwi, not as strong. It's a bullish day, but can't get above the 50. Not as strong for against the Aussie. That's kind of interesting. That's probably China. And then, a strong day for Euro against the Canadian dollar there. That's what we're seeing. There's that strength for Euro. Okay, as I said, I think they will be having the finest filet mignon and Chateau Lafite this evening in Brussels because of that. But as I said, that might be just my particular view on that. Anyway, so that's what we'll see, and that I think might add to a little bit of Euro strength for the next few days. That's we'll see. All right, let's finish with sterling. All right, in terms of what's that telling us? What have we got for the week? As I said, we've got CPI on Wednesday morning, which people are expecting to come in hotter than last month. We've got PMIs on Thursday, and then retail sales on Friday. So Wednesday, Thursday, Friday can be interesting days for sterling. So what are we looking at here? Well, you've basically got relative news, good news for the sterling in terms of all the you've got dollar weakness and a little bit of sterling strength there, haven't you? So that's why we're seeing that in the pound against the US dollar, pound against the Japanese yen. Okay, we had this was a great trade actually last week. We were basically up here to the highs of March and April. That's what I was looking at trading off there last week and stuff. And as you can see, having put in the week before, we put in a really lovely run up there, then basically got up to the highs of March and April there, and we just come down really nicely from it and stuff. It's a lovely reversal trade. That absolutely, I wish they were all that simple and easy, but there you go. But you can see for yourself. We're starting this week bullish. Okay, sterling, pound against Swiss franc. My views on pound against Swiss franc. Okay, it's mostly a pain in the hoop. But once again, that to me, looking at pound against Swiss franc on the weekly chart. All right, let's look at that. It's just basically, for the most part, those lows have all been higher. All right, that's the way I'll be looking at that. And here we are pivoting around the 50. I think if we continue the risk on, it needs to holding above the 50 and then above the 200. That's pretty much here. I'd see that as risk on. Most definitely risk on there. The condols are a bit of a strange one. It's kind of interesting that if you look at that for pound against the Aussie, pound against New Zealand dollar, the pound and the euro, they're not punched there against the Aussie and Kiwi. Yes, against Canadian, but I wonder if that Canadian dollar is more to do with energy than anything else. And then let's have a little look at the euro against sterling. Okay, so weekly chart. For 18 months or so, I've been banging on about the trend and actually how basically just trading the bounces off the 50 period moving average on the weekly chart was easy money, all right? Until you had we had a bullish key reversal, which then became a double bottom with this low was higher. We then basically, let's clear this off. We flipped it here. Okay, that was 20 period moving average, period 20, rallied higher, and then dropped. Okay, that was all the kind of anti-US rhetoric piling into the euro, and then once actually everybody realised that Europe it's not replacing the US. All right, they might talk about it, but it ain't happening. Suddenly we saw and a little bit better sterling news. Okay, and sterling trade deals. We've just seen that fall away, and now here we are. We're back at this kind of the 50, all right? That 50 that has been resistance, is that now going to be support for us, all right? We've got the 20 and crossed the 50, 84, which we've talked about before, has been, been significant level for years. We're here now. Are we going to basically, maneuver off that. If I go down to the daily chart, well, in the daily chart, I would look at that. We're sat on 84, and I think maybe as more details come out this week, well, then maybe we get a decision upon that, okay, in terms of, where it wants to go. But I would look at that, sat at 84, sat just above the 200 period moving average, just kind of, it's interesting, isn't it, that it's not, it's just sat there. It's not really kind of made any move. There's not really been any volatility there whatsoever, is it? It's just a case of, just going sideways, nothing really. The start of this week, even the start of this week, maybe a little bit of a gap up, all right, a little bit of gap up and a little bit of a, this morning I didn't trade it this morning, so I didn't trade it this morning stuff. It was just basically, a little bit of bullishness there on the intraday chart, but nothing really to get you excited about. So, we're just gonna have to wait and see what that happens. Maybe it just takes out the volatility, that we've had for maybe the last 18 months. Maybe it just takes out all volatility out of the euro sterling. All right. And euro sterling just goes back to sleep again. I'll wait and see. I'll talk about that more in the future as we see it develop. Okay, ladies and gentlemen, let's draw it to a close there. I hope you found that useful. I hope that's given you a little bit of help and a little bit of insight. Just a little bit of housekeeping. It's a bank holiday next week, and I'm up in the Highlands of Scotland for the week, so we will return in 2 weeks' time. I think that's the 2nd of June. It's going to be an interesting week. Okay, plenty of good data to look at for those of you sort of trading. So, as always, make sure you're managing risk. Make sure you're on top of the news flow. Make sure you're on top of Trump's Twitter. Have a fabulous trading week, everybody, and I will look forward to speaking to you in 2 weeks' time. Okay, take care, trade well, speak soon. Cheers.